Good morning, everybody. Hey, welcome to Wednesday, May 13th. Glad you're able to join us today. Sorry I missed yesterday. Had a Kiwanis board meeting at 8 o'clock in the morning, so had to take care of some business there. But glad you joined us today as Dave and I get ready to talk about what's happening in the economy and what's happening in earnings. Not much on the earnings front today, but still thankful that you joined us today. And I hope that your week, as we look back, is off to a good start. We've had a mixed set in the markets, and we'll continue to discuss those today. Hey, remember, these markets have bounced back significantly. That's not what the pundits think is going to happen long term. So if you don't know exactly how much risk you have in your portfolio, please give us a call. Walk through our financial x-ray to determine how much risk you are having in your portfolio, to determine what the risk and the losses may look like should this market turn down again. Give us a call at 863-382-0037. Hey, Dave will join us on the next tick.
5.7 Light FM. It's Blondie. It's Morning Dave. That's Call Me. Well, actually, I called him this morning. It's time to check on your money. And I called Phillip Statler from Statler Financial Services because he's always got the straight take on what's going on. Set the table for the morning while Phillip catches his breath for a minute. It was an off day on Wall Street yesterday. Dow fell by 457 points. That was better part of 1.9%. NASDAQ was down by over 2%, and the Standard & Poor's was down even more, down 2.05%. Not a good day. Phillip, the word that I got from the analyst that I read was just everybody sitting back and listening to Dr. Fauci and saying, maybe this reopening is going a little faster than we should go, and they sold everything like chiclets yesterday. Fair reflection?
Well, it did. I mean, we started out the day in pretty good territory, right? We opened up to the positive side yesterday, and even I think through lunchtime as I was watching, we were still in the positive territory, but the afternoon gave way because of the continued rhetoric that we're hearing out of D.C. And so we continue to hear that. And even this morning, the markets are bouncing back up a little bit this morning, but we're still hearing that this morning that, is the second wave starting in China? That's kind of the big headline now, is that, hey, maybe China's starting to see a second wave of the coronavirus. And how does that affect us? And does that mean we will see a second wave of the coronavirus? So that's weighing on the markets, as well as balancing itself against what we saw yesterday, right? The House putting together a $3 trillion package to put out for stimulus. And so, the markets are weighing those two things. One's a positive, one's a negative, and try to determine which way they think it's going to go.
And if there's one thing you and I have repeated ad nauseum over the years, the one thing money does not like is uncertainty. And by definition, we're uncertain. We don't know what's going to go on. We know somewhere down the line, we got to reopen the economy. Don't know for sure whether we're doing it right. Hope we're doing it right. Can't be sure. Then we get little tidbits like China starting to see a return spike of the stuff that we know is going to come back to us. The question is how much. And it just uncertainty does not do well on Wall Street, does it?
No, it doesn't. And so that's why I'm kind of surprised to see that we continue to see some bumps up today. But I think it's because of the whole House and the stimulus that they think they're going to be able to push out sometime. But they're going to have to get some agreement with the Republican side on the Senate, because right now the Republicans are basically holding back and saying, look, it's too soon to tell whether or not we really need another stimulus package right now. We need to see what the economy is going to do. We need to slow down on the stimulus. We've put a lot out there. Give it time to work before we start thinking about more stimulus. And so there's going to be this back and forth until the White House, I think, believes that we need more stimulus. And when that happens, then I think the Republicans will come to the table, and the Democrats will definitely be ready at that point.
I try to stay nonpartisan, but at the same time, we proved that we can pump out a running ton of money in pretty short order by the first stimulus effort we've got, waiting to see whether or not it does any good whatsoever. might not be a bad idea right now. I'm not talking about waiting 6 months, but waiting a couple of weeks anyway before starting to pump another, like 15% onto the national debt because it's money we don't have to begin with. That just kind of seems like a good idea to me to, at the very least, see whether or not the money we dumped on the economy the last time had any effect.
Well, definitely, David. And I think it goes back to some of the studies back from the Depressionary times, right? The one thing that they determined, the economists kind of looked at back in the Depressionary times was, hey, one of the things we could have done better was pour more money into the system faster. And that would have maybe not stopped the depression, but would have lightened the load. Now, obviously, we got to pay for it at some point in time, right? And so we're dumping all this money. At some point, we're going to have to pay the piper. And whether that's 5 years from now or 10 years from now, at some point, taxes are going to have to go up to pay that bill.
Absolutely. And then you get into the ideological argument between the two parties as to which is the better way to stimulate the economy. Give the money to businesses that provide the jobs to put people back to work, or give the money straight to the people and have them buy from the businesses, which will generate jobs. And really, that's an unanswerable question when you get down to great big macroeconomic sides. But at the same time, we're going to have that argument as to which best way to stimulate the economy, provide the jobs or provide the money to provide the jobs. It's just one of those times I wouldn't want to be a politician.
I don't think I'd ever want to be a politician, Dave. It doesn't matter what time it is.
Point well taken. Something that isn't political, but is a simple fact. Government put out the consumer price index numbers yesterday. Not as much inflation in at least one measure as they expected. On the producer inflation side today, they showed that prices going into the factories, into the producers, declined by 1.3% during the month of April. Was that a pleasant or an unpleasant surprise, Phillip?
Well, that was I guess it depends on how you look at it, right? It dropped more than expected, right? It dropped it was supposed to come in by minus 0.5%, and instead it came in at minus 1.3. So prices dropped more than were expected, which means demand had dropped lower than expected. And that's why the prices have dropped.
Which is kind of why I'm thinking that a more negative number than expected in these times probably is bad news because it indicates demand problems.
Exactly. Yeah. We would normally think a decrease in price was a good thing, but when it's coming because people don't want to buy, they're not selling as much, then that's not a good thing. You're right, Dave.
Absolutely. So we're starting out the morning with one of those not good news situations to play with, following up a day that we pretty much showed what happens when you start getting into touchiness and uncertainty on the markets. Do we have any reports this morning on earnings season that might give us some good news?
No, I really don't. I had one company come out, but we don't have any stock price. CyberArk Software, which is a cybersecurity company. They're not traded on our stock exchange. They're traded over in Europe for the most part. So they beat by about 14 cents a share. Revenue also beat forecast. I'm sure that goes back to the same thing that we've seen before with cybersecurity. People are working from home. That means they've got to have some more protection on their home computers to help protect their office. But there's still this uncertainty with their guidance going forward. Now, I don't have any pricing on them now again because it closed yesterday down 5.7%. We'll see how it opens up today a little later on.
Understood. Talking about lifestyle and changes in what's marketing, I'm looking at the big leaders and losers going into the market and pre-market trading. No major surprises. Royal Caribbean getting a little bit of a dead cat bounce to an extent, and LabCorp, of course, doing very well for all the tests that they're doing. But there aren't any major surprises that I'm seeing on major moves on the marketplace either. Any indicators coming up this week that we're going to be likely to see that might move the market other than the inflation numbers we've gotten for the past 2 days?
Well, we've got obviously tomorrow's initial claims. So that's expected to come in at a little over 2.5 million. We have import and export prices come in tomorrow. And those are all expected to be negative. Friday, we do have a slew of stuff, not much that people are going to really want to talk about. Retail sales is the big one that comes out on Friday. Other than that, you got the New York Empire State manufacturing number and the Michigan sentiment number, which are both interesting numbers to keep track of.
Absolutely. I got to assume the first-time unemployment claims, as long as they go down, stay in the astronomical range. We know that, but as long as they go down, that's going to be considered good news.
I think so. I think they came in at a little over 3 million last week.
Yeah,
So,
3.2 memory serves. Yeah.
So if we come in at less than that, I think they'll be happy with that. But again, if they're over that 3.2, then that will, I think, be devastating tomorrow.
Yeah, we're getting impatient to see some good news. Resetting the table for the morning, off day on Wall Street yesterday. We've been mentioning a lot of uncertainty, and before we went on the air this morning, Philip, we were both saying it wouldn't be a shock if the green ink we see early on turns red as the day progresses, because we've always said money does not like not knowing where it's going, and nobody knows where we're going right now. 45 minutes before real trading begins, what do we look like on your ticker?
Well, everything's green. I want to mention one thing before I give you those numbers, though. The Fed is starting to buy, for the first time, exchange-traded funds, specifically that target corporate bonds, which means they're manufacturing money to go out and buy stuff. So think about that until we talk again tomorrow, in terms of what that's going to do to our economy. So
they're also junk bonds, which really kind of surprised me.
And munis. So yeah, it's really a weird time we live in. So, but we've got, everything is green right now, and we're kind of the middle of the road compared to where we were early on, compared to where we were a little later. So we're kind of the middle of the road right now. Still positive. The Dow's up 117 points, 0.5%. The S&P 500 is up a little over 15 points. That's a little over 0.5%. NASDAQ's up 71, up about 0.7%. So everything's looking good there. Again, we could give back like we did yesterday. Commodities, we're seeing some increases there too. Silver's up 0.6, and gold is up over 1,700. It's at 71, up 0.7%. And then crude oil is about where it was Monday when I talked with you last. It's up about 0.3 to 25.87 a barrel.
About the same where it was yesterday too, between 25.75 and 26.5. It's kind of shuffling through there. We aren't going up like we need to revive our oil patch. Overseas markets, Asia closed modestly off early on this morning. Europe is kind of responding to our herky-jerky movements and selling off a bit more than 1% to 1.5% on their major markets. Philip, we've been talking about uncertainty, talking about money not knowing where it's going. That's probably a poster child situation to review one's retirement plans. How do I find you to get that review?
They can give us a call at 863-382-0037 to schedule their no obligation financial x-ray to determine how much risk they have in their current portfolio. Hey, follow us on Facebook, Statler Financial Services. Follow us, look us up there. We repost our morning show with Dave there every morning, as well as some links to our radio shows after they get ran. So we've got that. And then, like I said, the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m.
All right, back here tomorrow morning to tell you what happened today and what's likely to happen tomorrow here on Light FM. Phillip, thank you so much. Glad you're back, and we'll see you tomorrow, all right?
All right, you have a great day, Dave.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope that your week is going well and continues and finishes strong. Please join me tomorrow as we review what happens today and kind of look at what might happen as the day unfolds tomorrow. So have a great day, and I look forward to speaking to you again tomorrow.